everyone, welcome to my channel. I'm Doris and I'm here to share with you about the top 10 US stock news in 2022. For US stocks investors, 2022, which is about to pass, is a bitter year. The earlier miscalculation of inflation trends by Fed policymakers and the subsequent oversharp shift in monetary policy artificially directed the wild swings in financial markets. Buffeted by the Fed's aggressive rate hikes and recession fears, U.S. stocks posted their worst annual performance since the financial crisis this year. I sorted out the major events that have occurred in the U.S. stock market in the past year and selected the top 10 U.S. news in 2021. Number 1. The Fed raised interest rates by a frantic 425 basis points, raising fears of a global recession. The Fed launched its current rate hike cycle in March, raising its benchmark interest rate to its highest level in 15 years, by a total of 425 basis points in 7 times this year, in response to high inflation. After the Fed's raised interest rates, European countries followed, and a new round of interest rate hikes was set off around the world. However, as the pace of Fed rate hikes continues to accelerate, so do the voices of concern. Several international organizations, including the IMF, have warned that the continued interest rate hikes in advanced economies have raised the risk of a global recession and could cause lasting harm to emerging markets and developing economies. U.S. investment banks have also warned that the Fed's interest rate hike has caused losses to the U.S. economy, and it is time to slow down or even pause interest rate hikes. Number 2, the plunge continues, and the U.S. stock market hit its worst performance since 2008, with bears making more than $300 billion. U.S. stocks have continued to fall this year. Year to year, the tech-heavy Nasdaq is down 33.03%, and the Dow and S&P 500 are down 8.58% and 19.24%, respectively. Technology stocks have fallen particularly hard, with Tesla plunging nearly 70% this year, Amazon and Nvidia down nearly 50%, Google down 38.46%, Apple down 27.55%, and Microsoft down nearly 29%. The plunge in U.S. stocks has pushed the bears to a profit, and they are on track for their first annual earnings since 2018. According to S3 Partners, short sellers now have $303.7 billion in realized unrealized gains, a fourfold increase from 2018, their last profitable year. Number 3, China and the United States make progress in audit supervision cooperation. Chinese concept stocks face an epic rebound. According to Xinhua News Agency, Sino-US cooperation in auditing supervision has made positive progress. On December 15th, the U.S. Public Company Accounting Oversight Board said it confirmed that it can complete inspections and investigations of Chinese mainland and Hong Kong accounting firms in 2022, and revoked the recognition of relevant firms in 2021. The spokesperson of the China Securities Regulatory Commission said on the 16th that it welcomes the redetermination made by the U.S. regulator based on regulatory professional considerations. The market generally believes that this marks the positive result of Sino-US audit and supervision cooperation. The delisting risk of Chinese concept stocks has been basically lifted, and it also released a positive signal for future listing of Chinese enterprises in the United States. Number 4, Silicon Valley tech giants start big layoffs. The U.S. technology industry is cold, and Silicon Valley giants have begun to lay off workers on a large scale. First, Elon Musk announced a 50% layoff after entering Twitter, followed by Meta founder Zuckerberg announced that he would cut 11,000 employees. Then Amazon was also exposed to cut tens of thousands of employees. There is news that Apple has suspended hiring in almost all departments. Microsoft, Intel, HP, Micron Technology, Salesforce, and others have also joined the ranks of layoff. In the first 11 months of this year, the total number of layoffs by U.S. technology companies reached 80,978, an increase of 535% year-on-year, and the scale of layoff hit a new high in 20 years. Elon Musk's acquisition of Twitter staged a series of farces. Elon Musk's acquisition of Twitter, from the initial offer worth of $44 billion to the middle of the repentance to go to the court, and finally forced to swallow the bitter fruit, tossed for half a year. After taking over Twitter at the end of October, Elon Musk began drastic reforms, including laying off more than 50% of Twitter's employees and trying to build a hardcore culture at a company known for its leniency. Elon Musk's excessive focus on Twitter sparked concern among Tesla investors and became one of the major factors dragging Tesla's stock price down. Under the pressure, Elon Musk recently launched a Twitter poll asking if he should step down as CEO and promised to do so once he found someone stupid enough to take over the mess. Number 6. Buffett binge-bought oil stocks and also took a heavy position in Taiwan Semiconductor. After a year of dormancy, Buffett has finally made a move in 2022, when value investing is once again prevalent after the outbreak of Russian-Ukrainian conflict. After the outbreak of the Russian-Ukrainian conflict, he bet heavily on the oil sector and increased his holdings along the way to Chevron and Occidental. At the end of the third quarter, Berkshire held 194.4 million shares of Occidental and 165.4 million shares of Chevron, for a total position of nearly $60 billion. However, the biggest surprise of Buffett's investment this year may be the purchase of more than $4.1 billion worth of Taiwan Semiconductor shares in the third quarter, making it Berkshire's 10th largest stock. This is another rare big bet on technology stocks after Buffett began investing in Apple in 2016. Number 7. The US IPO market has suffered a cold winter, and the amount of funds raised has plummeted by more than 90% this year. The US IPO market has suffered a cold winter as liquidity tightens due to the Fed's interest rate hikes, raising just $24 billion so far this year, the lowest level since 1990 and down 93% from 2021. Meanwhile, global IPO funding this year fell 68% year-on-year. Amid a cooling U.S. market, the worst decline since IPO proceeded plummeted 73% in 2018. Number 8. Tesla stock price plummeted by nearly 70%, and Elon Musk lost the richest man. Tesla stock's price has fallen nearly 70% this year as rising interest rates have caused technology stocks to tumble, and its market value has fallen below $400 billion. In last year's highlight moment, the company's market value once exceeded $1 trillion, and Elon Musk himself was worth more than $300 billion, becoming the world's richest man. Now Elon Musk has fallen from the richest man throne and been replaced by the LV and by the Louis Vuitton boss. For Tesla's stock price decline, most respondents believe that it is dragged down by Twitter's farce, but Elon Musk dumped the pot to the Federal Reserve, saying that the stock price plunge was caused by the Fed's interest rate hikes, and Tesla itself has no problem. Number 9. Liquidity Phase. U.S. stock SPAC backdoor tights saw ends. Against the background of overall poor performance of U.S. stocks this year, the wave of backdoor listing of SPACs in the United States, which has been hot since 2020, has also begun to subside significantly. With aggressive rate hikes by the Fed, market conditions reversed and the boom turned into a bust. About 70 special-purpose acquisition companies, SPACs, have liquidated and returned money to investors since early December. The data showed about 4 SPACs liquidate each day. More SPACs say they will liquidate in the coming weeks. Number 10. Meta's entry into the metaverse failed, and Zuckerberg was bombarded by employees. Recently, on the anonymous forum Blind, the United States was filled with a large number of voices from Meta employees, among which negative emotional comments accounted for the vast majority, pointing directly at the company's CEO Mark Zuckerberg. A software developer bluntly said that Zuckerberg is single-handedly using the metaverse to kill the tech giant. Meta's share price is down more than 70% so far this year. The company announced last month that it will lay off 11,000 jobs, or 13% of its workforce. Zuckerberg said at the time that it was one of the toughest decisions he had to make in 18 years of running the company. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.